This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, November 27th, 2014. So just a quick heads up that the market is expected to thin out quite a bit with U.S. markets closed for Thanksgiving today and most traders off the desks on Friday in the U.S. So thinner trade for the remainder of the week. Now the euro has been attempting to recover over the past several sessions and for most of this week after stalling just shy of the 2014 low at 123.58, and the market is now back above 125. But ultimately, the trend remains firmly intact to the downside, with the market being well capped below the 50-day moving average. And so long as we remain capped below the 50-day moving average, the downtrend remains intact, and the market is expected to stall out in favor of a bearish resumption. A break below 123.58 will eventually expose the 2012 base at 120.40. Sterling dollar. So cable has enjoyed a nice recovery over the past couple of sessions after recently establishing a 2014 low at 155.90. The gains are classified as corrective, with the market still locked within a well-defined downtrend, and we could see a bit more of an upside, although again corrective, towards 159.45. Ultimately, only back above 162.25 would give reason for a potential shift in the structure. Dollar yen. Dollar yen continues with its correction on Thursday after taking out some key short-term support at 117.35 in the form of the 21st of November low and 10-day moving average. The break now sets the stage for a break of more significant short-term support at 116.80, below which will open a legitimate correction down likely into the 113 to 114 area. The market still is locked within a very well-defined uptrend and is just in the process of a healthy correction in favor of the next higher low and bullish resumption. Daily, weekly, and monthly technical studies are all now in the process of looking to correct a little bit from overbought readings. Euro Swiss. Euro Swiss continues with its nice little recovery after stalling just shy of major psychological barriers at 120. The market will, however, need to break back above 120.45, the previous September 2014 low, to encourage prospects for a legitimate reversal. Aussie dollar. Aussie has enjoyed a nice little recovery after breaking to a fresh 2014 low this week, with the market rallying back above recent figure support at 86. However, the break below 85.41 and to the fresh 2014 low on Wednesday at 84.80 does suggest that the market is going to be headed lower over the medium term, with a measured move objective seen towards 81.70. Ultimately, only back above 89.11, that's the high that we saw on the 29th of October, would compromise the bearish outlook. Dollar CAD. Dollar CAD is in the process of correcting after recently establishing a 2014 high at 14.67. The market is now looking for the next higher low above 11.22, that low that we saw on the 29th of October, in favor of a bullish resumption back above 14.67 and into the 117 area further up. Kiwi dollar. Kiwi has mostly been locked within a consolidation over the past several weeks, with the market recently putting in a fresh 2014 low on the 7th of November at 76.60. Ultimately, given the scope of the move over the past several months, which has been to the downside, the structure favors further weakness below 76.60 and towards the 7,300 area further down. This should translate into a well-capped market below 80, with only a break back above 80.35 to compromise the current outlook. SPX 500. The S&P 500 continues with its surge, breaking to yet another record high on Wednesday, just shy of 2080, with the market rallying all the way up to about 2077 ahead of this latest minor pullback in early Thursday. A break below the low from Wednesday at 2065 would do a good job of potentially opening the door for reversal, but we would need to see a close below that level to confirm and open that correction. 2052, the low from the 21st of October, becomes more significant short-term support, below which would then open the door for an acceleration to 2030 and then 2002 further down. Inability to take out the previous daily low at 2065 would keep the pressure on the top side, and the focus still on a major test of major psychological barriers at 2100 further up. Gold. Gold looks like it could be in the process of rolling over after recently rallying up above 1200 to 1208, and a break back below 1175 would be required to confirm and suggest a lower top is in place ahead of a retest of the 1131 4-year low that was set on the 7th of November. Inability to break down, however, and back above 1208 would open a more significant correction up towards the 1230 area, but ultimately only above 1256 would negate the current bearish structure. That's all for today. Have a good one and see you back on again tomorrow.